This week, the Commerce Commission is set to make two big announcements expected to result in a big leap forward for open banking. There's also a piece of legislation going through parliamentary processes at the moment that will lay the foundation for open banking to take off in New Zealand. I'm Alexia Russell, and today on The Detail, what is open banking? What have our big banks had to do to be ready for it? And what regulations need to be introduced to make sure this new wave of convenient money management goes smoothly and securely?
Open banking might not be a phrase you've heard of, but it means securely allowing a third party to connect to your banking information. So, for online shopping, forget about entering your card details, and instead, you can make your bank information available to a third-party service provider.
But it's so much more than a new way to pay your bills.
It's talked about in a few different ways that makes it a bit hard to get your head around, but fundamentally it's about enabling third-party companies to have access to your banking information.
Now, if you go down the what is open banking rabbit hole on Google, it's not long before you get lost in the jargon of financial terms. A network of synergetic third-party applications, the application programming interface, and all sorts of tech startups that sound like a toddler named them. So I've asked Business Desk technology editor Ben Moore to plain language this whole thing for us. He co-hosts a podcast on tech and business, which is called, appropriately, The Business of Tech. First of all, he points out that we kind of already have open banking. Think poly payments, which are used to pay a road toll on NZTA's website, for example.
Now, historically, that's been done with a technology that's called screen scraping. That's been the most common way so far, where you give a company your credentials to your bank account. They log into your bank account with some software. It goes in, sees what it needs to, does what it needs to, and then logs out. It's not the most secure way of doing things.
Because you have to give them your password, I presume.
Exactly, yeah.
Right.
And banks don't really like it very much. They say it's a breach of their terms and services. So
in what circumstances would you have to do that?
if you've ever used Polypay or account-to-account online, that's what that is. That's what you're doing when you enter your bank details. You're actually giving them to a third-party piece of software.
Consumer New Zealand is warning that the Poly payment system, which has been used by nearly half of bank customers to make direct payments online to avoid incurring credit card surcharges, could breach their bank's terms and conditions.
So that's the most common usage. Other than that, it's not really used. If you're applying for a mortgage or a loan, that's why a lot of the time you will print out 3 months of statements to give over. More and more it is being used for those purposes as well. So really, the new wave of open banking is building a piece of software within a bank that can give permissions for access to account information in a really secure and configurable way. And that's what we're thinking about when we're talking about this new wave of open banking. And going out one step more, that's all around the consumer data right, which is about giving consumers back the right to share and manipulate their own data that's held within organisations like banks.
What do you mean manipulate? It's not like you can't tweak your bank statement so the mortgage company doesn't know you spend $10 on a coffee every day.
No, and that's one of the things about these pieces of software is that what they're reporting is it's just factually what is in the bank account, because the person who is providing the authorization doesn't have any interaction between the third party accessing the account and the data that moves between them. It's just straight access to that data, authorized by the banks, done in a secure way that uses the software built into banking systems. That is, has a little bolt-on like tunnel connector for third parties to log onto and say what they want, ask your permission, you give your permission, away we go.
So this tunnel connector, or I think some people refer it to as a bridge.
A bridge, yep. The technical term is an API.
What does that mean?
And that stands for Application Programming Interface. So yes, it is an interface between applications, between computer programs. It's a way for them to talk to each other. And when they're talking to each other, that's sharing data. And data is any information about you, about your bank account, about how you've used bank account products, or further out, electricity products or insurance products. Eventually it will reach those industries as well.
So you've got the bank, you've got the bridge. Who are these third parties? What are they called and what are their purposes?
Yeah, that's a great question. They're what we call fintechs, financial technology companies. They're quite often smaller companies, but not always. For example, Revolut is a UK-based company that has just got approval as a bank in the UK. It's global in 42 countries, I think. It's quite hundreds of millions of dollars a year in revenue. So reasonably big. But then in New Zealand, because we're still relatively early, we have a lot of these smaller companies. So we've got a company called Dosh, which has applied to be a bank in New Zealand. We've got companies like BlinkPay and Volley and QuickPay and all of these kind of smaller companies that want to take these APIs and use them to do really exciting things, provide exciting financial services for people.
What it does is it allows you, those clever third parties, to create new products and services that should hopefully make your life easier and better, hopefully a bit more financially easier to go along with. So ultimately it's centered around you, the customer, and it's all around centered around your consent. Nothing happens without your permission, and so nothing happens without you saying it's okay to do that thing.
And I presume they're all virtual?
Yeah, pretty much all digital, yeah. When we're talking about banks like that, fully digital banks, we call them neobanks. They're a kind of growing presence across the world. There's no branches, all online, maybe a phone number if you're lucky, but more or less going to be all email, online chat. And
can we trust them?
As long as they are going about things in the right regulatory way, I don't see why not. You know, New Zealand has pretty stringent rules around who can and cannot be a bank. So if somebody gets approved as a bank in New Zealand, that means they meet certain capital requirements, certain security requirements, various other requirements that are arduous and pretty expensive. So can we trust them as much as we can trust, the Reserve Bank of New Zealand's oversight, I think?
And it's guaranteed secure?
Yeah. I mean, it is guaranteed secure in as many ways as you can guarantee security in the modern world. It's certainly going to be one of the most secure ways of sharing data because banks, they don't really like it when your money gets stolen because, you kick up a fuss. That's one of the reasons that open banking has been relatively slow to roll out in New Zealand is because they wanted to make sure everything was really safe and secure before they started bolting on to their old systems. Their old systems had to kind of be updated to allow for it to be done.
So that's what they've had to do to lay the foundation for this. They've had to update security and that kind of thing.
Yeah, not just security, but some of these banks are old as time, and they have digital systems that go back to the earliest days of digital systems. So it was once explained to me, in 1998, Jeff built a piece of software code and he plugged it in to do something, and then 3 years later Jeff left and it was written in a weird code that only Jeff and 3 of his mates spoke or wrote, and so now nobody really knows what it does. They have to go in and figure out all of these things. They have all of these legacy systems, we call them, that really need a lot of attention and updating so that when that request is made through that bolt-on connector bridge API, then it can go and get what it needs to, service it, and send it on its way.
So does that mean all the banks have to have the same software?
Yeah, so that's a big part of it as well, is that you could just say every bank has to have an API, but then they would have different standards and it would get really complicated. So Payments New Zealand's API Centre, Payments New Zealand is a bank-owned company that kind of manages payments. They set up the API Centre specifically to create these standards for the development of APIs so they could be standardized. And fintechs sit on the API Centre board. They have independent directors and they have bank directors as well, all working towards making sure they're kind of where they need to be. So that if one bank has an API that can be connected to, when another bank has that API, that same third party can connect to that one as well with the same standards. Okay.
So you've got your banks that are doing all this upgrading. Did they have to be dragged kicking and screaming into this?
It's a big question. Kind of, I think, is the answer. Yeah, it has been really tough to get the banks along because they are big and old and traditional.
And also, they pay out for these software upgrades, right? They're expensive.
Yes, they cost money to be developed and time and resource. And also, they will allow other companies to get access to what has traditionally been their data. Data about consumers, about their customers, has traditionally been owned by the bank.
So there's a very basic change of mentality here from saying that data belongs to the bank to saying that it belongs to the consumer.
Exactly. Yeah, that's really fundamentally what this is all about. Now, at the same time, you don't just want consumers to be able to say, do whatever they want with that data, because that could be risky. So that's why we have the Consumer and Product Data Bill, the CPD bill, that's going through Parliament at the moment, that has support of every party across government to say we want to create a way that is safe and secure for customers to be able to use this data to their benefit, particularly if that means allowing a third party that has been accredited, that we know is safe and meets all these standards, to access that data in a specific way.
So that bill will set the foundation for what the rules are over the third parties.
It will set the foundation for the rules are over third parties and API providers, the banks.
This is Commerce and Consumer Affairs Minister Andrew Bailey introducing the bill to the House in May.
This bill sets up a framework which will make it easier and more attractive for entrepreneurial startups to challenge big established players, first in the banking sector and secondly in the electricity sector. At its most basic, the bill sets out a framework for data to be safely and simply accessed and shared.
At the moment, open banking is industry-led through Payments New Zealand and the API Centre. As the regulation comes in, it is going to be more government mandated. So it's happening. It has taken the threat of regulation to really get things moving.
So when are we expecting this bill to be passed?
So the CPD bill is just past its first reading, so probably a few more months, kind of hopefully by the end of the year, maybe early next year. Just depends on how things go through Parliament. It's not always predictable.
So Ben, today there's a decision coming out that involves all this. Can you talk me through that?
Yeah, that's the Commerce Commission's inquiry into banking competition broadly. Open banking is just one part of it because they say, and I believe rightly, that open banking will or can improve competition in banking in New Zealand. We saw earlier that the Commerce Commission described the big four Australian banks in New Zealand as a cosy oligopoly. Quite firm words from a Monopoly Watch organisation. And so that means that what they are hoping to do, and open banking is part of that, is make it easier for people to switch or choose banks or understand better what bank will suit their needs and kind of drive down fees and rates and all those kinds of things. So the one that's coming out today is all about the competition in banking. Open banking is just a part of it. And that's just going to be around the Commerce Commission saying, basically putting their weight behind the movement towards open banking and saying these are the things that we expect to see or not see with open banking. Because if we come out with an open banking that just maintains the status quo, that just has excessive fees, that has really expensive accreditation criteria, makes it hard for these fintechs, these third parties to actually access the criteria, the APIs, then there's no point. We've seen that in Australia.
Right.
So the Commerce Commission's here to say, yes, we know it's cost you a lot of money, we know it's a lot of work, and we know that, it may challenge your status, your power, but we need you to do it anyway.
And the second announcement this week is expected to confirm that Payments New Zealand, the bank-owned company that oversees payments in this country, has been successful in its bid to regulate the introduction of open banking.
They have to apply for Commerce Commission clearance because they do represent a block of banks. And it's, could be considered cartel-ish.
Yeah.
And so they applied for it, and they want to be the company. They're already the company that sets the API standards for the banks. They want to set the standards that third parties have to meet. So the Commerce Commission, in their first draft, came out and said, yep, we're happy for you to do that, but here's the criteria. The criteria are bank directors don't get a vote on those standards, that it will only be for a term of 18 months, not 5 years like you initially wanted, because we may want to come in once the CPD bill is set and change things, and that you have to be really, really transparent and save all your emails, save all your meeting transcripts, save everything, so that if we do decide that either, we want to move that away or create a new regulatory body or just absorb the API Centre into the government, whatever they decide they want to do, who knows, that they will have all of that background information for how decisions were made.
So what is the actual decision that we're expecting on Thursday?
Whether Payments New Zealand gets approved
right.
to set those standards and
With all
what
these
the criteria
conditions.
are under which they are approved.
Is that that's likely to happen, right?
It's likely to happen, considering their draft response. They seem to be yes, that they will approve it. I mean, and Payments New Zealand came back and said, we don't really like this idea that bank directors don't get a vote. Why don't we make it one bank director gets a vote and 3 independent directors? So they've kind of come back and said, we'd really like 5 years if that's okay. So
the details will be hashed out.
The details are being hashed out, and that's what's coming out on Thursday, really.
New Zealand's been slow in the uptake of open banking, but that's not altogether a bad thing.
The advantage of our slow start is that we've been able to learn from other mistakes. Open banking has been slow in Australia. I've met with the person that drafted the legislation, and what we have done is we've observed what has happened and learnt from this and adapted our framework so the same won't happen here.
Australia, unfortunately, they're rolling out open banking and it's having some success, but it has been really over-regulated and become very expensive for those third parties to become accredited. Too much of a barrier to entry. That's one issue. And the other one is that they don't have that right access. So all you can do is view the account data, which makes the uses very limited. So while it hasn't been overly successful in Australia, the New Zealand government minister, Andrew Bailey, told me that they are taking quite a few actions to make sure that it is more successful in New Zealand, that they have the right access from day one. They're working to promote it, and he's been talking to the Commerce Commission as well about how they can promote the swift uptake of these APIs.
So in Australia, you wouldn't, for example, be able to use it to make online payments?
Yeah, correct, yeah.
Because you can only see the data, you can't use it to swap that money around.
And that's why screen scraping has been a bit sticky in Australia.
Okay. The Australian example is a lesson learned for us. Banks there spent $1.5 billion upgrading their systems for open banking. But now, because they didn't have the right rules in place to make it easy for these APIs to work across all the banks, it's going to cost another $2 billion to get that access right.
So that's kind of kept screen scraping going and the regulatory pressures. So Andrew Bailey pointed out to me that they created a whole new regulatory body for how this data gets managed under open banking, and that set all these criteria that are really arduous and expensive to meet. Whereas in New Zealand, a lot of that's going to be just done under existing frameworks in the Privacy Act. If there are issues, then they will be addressed later down the line, but the Privacy Act, they reckon, is robust enough to oversee the management of this data.
The bill is supported by the Privacy Commissioner and complements existing protections in the Privacy Act. I expect that minimum security requirements to be set for each sector and regulations that follow this bill. Right now, New Zealand has no mandatory data standards for businesses. Many businesses operate complicated, out-of-date systems that put customers at risk.
And I guess another good thing about being latecomers, we just get to see how everyone else stuffs it up.
Yes, that is absolutely the benefit of the fact that we are behind the times, is that we've seen how things have not worked. We've seen what barriers there are. And we've also seen what's been really good. We've seen what changes the UK have had to make in order to improve things. And so we can build them in from the start where we are now. It's not going to be perfect. No plan survives first contact, as they say. But hopefully if it's set up in a way where it is dynamic enough that we can change things when we need to, and that's part of the API standards, is that there is a roadmap for how they're going to develop over time. So that's really important as well.
I guess I've got to build in technology we don't know about yet.
Yeah. The bill going through Parliament at the moment is really about the data sharing aspect of it. Open banking is the first step in data sharing, but it will reach out. It will go to, I think electricity is like really early on there. So you can, instead of having to say, dear electricity provider, please may I have my usage details, and then getting a spreadsheet back 1,000 miles long that you have to try and run formula over that you've asked ChatGPT for to try and get some sense out of it. Rather than that, you can just say, hey, I'm going to ask this person to check on my power usage so they can see if I can get a better deal. That all good? And they have to say, yep. and then they'll be able to compare that against other rates in your area.
Right, so a bunch of companies about to buck up their acts.
Yeah, that's the idea, yeah.
Okay, I see that there is a benefit for customers in that. I see that there's much more benefit for fintech companies. So they must be jumping for joy about
Yes,
this.
Literally in some cases, I think, yeah.
So whose favour does it weigh in? Because I feel like we're getting along just fine making whipping out your credit card and plugging it into an online site to buy stuff. Is this really going to be the kind of amazing thing for consumers?
Yeah, I mean, payments are just one part of it, right? Like, there's a couple of points that I can make here. So one is that we're actually behind the times on this. It's rolling out in other countries, and those that are doing it well, the UK, for example, are seeing good results. That uptake is a little bit slow because they were a pioneer and they've had to work out kinks. Singapore is doing it unregulated because financial technology is so important to their economy. The banks in Singapore are like, yeah, let's get these APIs out and get going. So we know that there are benefits. And like I said, payments is just one side of it. But it's also, say you've got a mortgage, a term deposit, and managed funds all with a bank. And you want to know, can I get better returns and lower mortgage rates if I move? Is it worth the effort? Rather than having to shop around and go and check and do your own, difficult research or rely on people who, these companies, compare companies that don't always know exactly your details, so you're not sure if you're really getting the right information. You can literally, one of those compare companies can say, okay, we now have all this data about the different rates. We can see what you've got, and we can tell you whether, yes, moving from bank A to bank B will actually offer you better returns based on historical data, potentially lower mortgage rates, or whether splitting them up across different banks and different providers could do that. So that's just one thing. And then you go to the other side and you look at people who have a lot of debt. Maybe they've got a personal loan, a maxed out credit card, an overdraft, and they're struggling just to service that every day. And they can say to somebody, I need some help. What can be done? And then they can go and say, let's look at all these providers, and if you combine those debts and you go with this provider, they've got this interest rate that they can do specially for you, and then we can automatically move that over for you, and it's going to reduce your serviceable down to this, and you can spread it over this amount of time. So payments, yeah, great, awesome, really nice quick payments are awesome, but actually in terms of the fundamental service that it provides for people across every layer of society, they're actually quite impressive. And at the end of the day, they will hopefully be pretty invisible. That's what you kind of want out of these technologies, but powerful.
Do you think there'll be some pushback by people, some technology phobes, some people who don't really accept it, that'll take a few years bedding in before this really takes off?
2 points. Yeah, absolutely. There will be people who resist it because we always do. And, I remember many years ago we shifted to having smaller coins, and that caused a real furor. People absolutely hated it. And I was working in retail at the time, and I printed out a picture of those little coins, and I underneath, don't be afraid of change, and stuck that on the wall because people kept complaining to me about it. But so we're always going to have those people. And
there are people out there who are still crying over the demise of checks.
Yes, yeah, exactly right. So, this is really the next step. And the fact that screen scraping has been really popular, despite its kind of insecure methods, I wouldn't say necessarily unsafe, but insecure, it's proof that this is happening. And so it's really important that we just do it in a better way.
That's it for today. The Detail is a newsroom production supported by RNZ and New Zealand On Air. This episode was engineered by Jeremy Ansell and produced by Gwen McClure. Thanks to Business Desk's Ben Moore. I'm Alexia Russell. Ka kite anō.